Very good morning, viewers. This is Abhijit Chattoraj welcoming you all on behalf of Birla Institute of Management Technology, popularly known as BIMTech. Today, we are going to discuss about a book which will make you sit and observe the whole it very carefully. The book is known as Insurance Governance for World's Largest Democracy. And it has been authored by two very eminent personalities from insurance industry, Mr. H. Ansari and Mr. Arun Agarwal. In fact, the latest book is the part of trilogy. It's not exactly a book. This is a monograph. So this is the latest monograph. Two more monographs have gone before it. I'll mention that briefly. Before we start the discussion, let me briefly introduce you with Mr. Arun Agarwal. Mr. Agarwal, a very warm welcome and very good morning to you on behalf of BIMTech.
Thank you so much, and a very good morning to you and to all the viewers. Thank you so much.
Thank you so much. Mr. Agarwal is a 1977 direct recruit batch officer. He joined Oriental Insurance, GIC, but more importantly, he was Chief Executive Officer of MS Cholamandalam. In fact, he was the first Chief Executive Officer. He was also Lloyd's London's General Representative in India. And of late, he is engaged with academic research and engagement activities with policymakers. The first monograph that he, along with Mr. Ansari, authored was a transformative agenda for the Indian insurance industry and its policy framework. It was in the year 2017. The month was precisely May. That is how the whole journey began. And then came the next monograph, which is an implementing agenda for Insurance Regulation and Development Authority of India to transfer its regulatory framework to serve India 2022. It was on behalf of Ministry of Finance, and it came in the wake of the first monograph. The whole idea was to come out with the specific suggestions. And the latest monograph is Insurance Governance for World's Largest Democracy. To begin with you, sir, is it your magnum opus or something more is offering?
Well, thank you so much, Dr. Chattoraj. It's really not, it was not intended to be a magnum opus. What was intended was that we should try and cover the entire gamut of the governance processes and the systems concerning the insurance industry. And it really pans out to include the non-life industry, the life industry, and the reinsurance industry in India. And the idea was to benchmark the governance standards in India with that of the very best in the world. And having come out with the previous two monographs, this was the idea that let's now talk of the entire governance structure, especially in view of the Prime Minister's call, which he made in 2019, sometime mid-2019, to say that, look, India should now become a $5 trillion economy in the next 5 years by 24-25. And then the whole thought process was triggered in our mind to say that, look, if we have to reach that goal, what it means? What it means is that every sector will then have to contribute to India becoming a $5 trillion economy. And that includes insurance. Now, how do you do that? You only do it by transforming the insurance industry. So it really fitted in with our concept and processes that we had started writing from 2017 onwards. And we thought this will be a final work of our kind, and this will be presented to all the policymakers in Delhi as well as to the regulatory office in Hyderabad. So that's how the whole concept and the whole effort was organized.
For my viewers, let me tell them one thing, that the latest monograph, that's Insurance Governance for World's Largest Democracy, has been sponsored by BIMTech. We are the knowledge partner. And it is our job also. We are nurturing young talents for the insurance industry to take up leadership positions in days to come. But as an academic institution of great repute, we also thought that it's our duty that we should be part of the transformative journey ushered in by Mr. H. Ansari and Mr. Arun Agarwal. So we thought that we should be a part of the entire process. And I'm extremely thankful to Mr. Dr. Harivansh Chaturvedi, our director, and Mr. Saket Khetan, senior partner, Khetan Legal Associates, and also member, Board of Governors, BIMTech, for having forwarded the latest monograph. And I must also tell my viewers, Director Dr. Harivansh Chaturvedi is a visionary. In fact, we were the first in India to initiate a 2-year postgraduate program in insurance business management way back in 2000 in the wake of the liberalizations. Not many institutions in India were really looking at these options, but we were the pioneer, and that's how the journey of insurance management program started in BIMTech, and the institution has been doing extremely well. And I'm extremely thankful to Mr. Arun Agarwal and Mr. H. Ansari for getting associated with BIMTech. My question to you, sir.
We are thankful, Dr. Chattoraj, that we're thankful to BIMTech. We are grateful and we are indebted that BIMTech actually came forward and supported us. It's a huge honor to us that we are now undertaking this journey together. Thank you so much.
It's our pleasure as well, sir. In your first monograph, you mentioned that regulators should be functioning as a transformative agent in order to ensure growth, healthy competition, as against protectionism. Can you really throw some light on it, sir?
Yeah, I mean, it's a fairly simple concept, Dr. Chattoraj, and it is that, you know, regulators all over the world, you know, there's always this debate whether they actually should be doing supervision or they should be actually also doing development. Now, supervision comes easy for those societies, for those countries where the market is already developed, you know. So all you really have to do is to ensure that you have a level playing field for all, and then you try and match the supply with the market's demand and bring the two players together. But in countries like India and China, and it was started by Singapore, there's been this notion and thought and effort that we just can't afford to be simply a supervisory authority. We need to be a development agency as well. And in fact, if you really go back to the nomenclature of the regulatory authority in India, it's called Insurance Regulatory and Development Authority of India. So therefore, in early 2000, etc., when the bill was actually approved in the parliament, the regulatory office has actually been converted into a development authority apart from being a supervisory authority. So, and if you really have that concept kept before you, then all you really need to do is to find out, I mean, for the regulator, that it caters to the supply, which is what its job is, matches the supply with that of demand, and then doesn't try and create demand because the demand is already there in certain segment, let's say commercial segment. And where it is not there, it is the government's job and effort to create the demand. So it is a play between the regulator as a supplier, between the market and the government in countries like India, where all three parties come together and ensure that there is an entire framework, integrated framework, which can then serve the market well. Now, one of the means through which regulator does this thing in terms of creating the right supply is to have competitive scenario created. So therefore, it tells all its players that, look, I'm giving you a certain framework of regulations. It might be prudential in nature, it might be conduct in nature.
Right, sir.
And then once we have defined this entire framework, we will give you a level playing field. We will not discriminate between the ownerships, And once we have given you the level playing field, that means the rules of the competition have been made very clear. Now, once the rules of the competition have been made clear, then it is expected that the players will then start playing the competitive rules, competitive game. And once they do that, once the real competition starts, that brings the efficiency in the system, because then if I'm competitive, I'll stay float. If I'm not competitive, I might have to move out, So that brings the efficiency. And when you have the efficiency established in the system, then naturally it leads to better penetration and better customer, customer treatment. So that's how the entire cycle takes place.
What I observed from reading the three monographs, the regulation, the regulator regulated well, but somehow when it comes to development part, that development is missing. That's what precisely the monograph tried to say.
Absolutely, absolutely. So, I mean, as I said, as part of the constitution of the regulatory authority in India, we've got this development concept inserted for a very long time ago, But what's really been happening is that we know what to do, but perhaps we have really not known how to do it, and what we should do so that it becomes a reality, And I think at the macro level, one more thing is very important, is that the linkage between the penetration and the inclusion, The moment you realize that when you have a high penetration, it helps the GDP. I mean, the other way around, the normal concept is that when the GDP goes up, it tends to have more and more penetration. But I think the researchers world over have shown that if you increase penetration, in many ways it helps the economy, it helps the GDP. And when you have more and more people included, ultimately it helps the inclusion. The moment you realize that there is a trigger between the penetration and the GDP and the inclusion, then automatically you will do everything possible under the sun to ensure that the market actually is developed rapidly, like what's been observed in UK, in Singapore, China, elsewhere. And I think the best example you can see in COVID-19 situation, arising out of the COVID, now there is a huge spurt in the demand for the health insurance. So all the regulator has to do is to ensure that, look, I have to have the right products with the right pricing, etc., and I'll be able to then cater. And I think the people have realized that if you had insurance, perhaps you would have been better included from a security perspective.
Are you really happy with the kind of moves the regulator made in the wake of COVID, in particular health insurance?
Yes, by and large, I think they have shown a greater degree of awareness, greater degree of involvement, greater degree of responsibility, that we have products available which can cater to every segment. However, what we've done is that when we started writing monograph 1, 2, 3, and 3, the latest that we're talking about, we have said very clearly that the entire process of the marketing of 4 or 5 P's, you starting with products and pricing and promotion and
positioning
and placement, which is distribution, should be market led. And what does the regulator do here is that it creates the conditions, it creates the framework, it establishes the principles. And once those principles and conditions are created, then automatically it nudges every single player in the market to ensure that they have the best products in the marketplace with the best possible pricing, with the best possible customer treatment. So there again, what we're talking about is creating a framework from a regulatory perspective. And once that framework is created, the market just takes off.
When you talked about the 4Ps, the most important piece is somehow missing. I have a feeling that insurance industry in India has not really positioned itself well. It's not seen as very friendly. The products, the kind of products, particularly in health insurance, that come out are very, very complicated and somehow it doesn't go really well. So don't you think that positioning is one area the insurance industry and the regulator needs to look at very seriously?
I'm so thankful to you that you have talked about the principles here. And that's exactly what we've been talking about in all our monographs, that principles are more important, you know. And one of the principles is that any insurance company, or let's say if broking company has been authorized to do it, as happens elsewhere in the world, developed world especially, but any insurance company, they know and they should know what their market is, what the market segmentation is, and what exactly will be the kind of products that will suit a particular market or a particular market segment, you know. What does a good regulator do, you know? A good regulator says that, look, I'm not the product specialist. I'm not the distribution specialist. I'm not the pricing specialist. But as a regulator, which has the mandate to supervise and which also has the mandate to develop, I'm going to give you a broad guideline, a broad framework in terms of products. And why it's important here is that because the regulator is the ultimate guarantor to the policyholder, and therefore it has to protect the interests of the policyholder. So how does it do it? So it ensures that the policyholder's pre-sale gets the product, which is a product which is contract certain, and post-sale gets a treatment from the insurance company. If there is any claim, the claim is actually adjusted and settled in terms of the product that has actually been sold. So that's precisely what the regulator does. And that exactly is the meaning of protecting the policyholder's interests. But having talked about the policyholder's protection interest, having talked about the fact that we also have to preserve the pristine understanding of these 4 Ps that you've talked about, the best arrangement in our mind would be that you follow certain principles regarding all these 4 Ps, and then you let the market, that you let the players actually come out with the products. They only can do it because they have all the researchers at their command, they have the underwriters at their command, they have the claim settlers at their command, they have the linkages with the international market at their command. So therefore, they are in a best position to come out with products which are appropriate and well suited for the market.
Before I come to your latest monograph, to set the context, in your second monograph, you categorically mentioned that development support to market world demand application of behavioral economics as envisaged in libertarian paternalism. What exactly you wanted to convey?
All right, so that's a very important question that you've raised, Dr. Chattoraj. And let me just go back to the foreword that you mentioned, written by Dr. Chaturvedi and Mrs. Saket Khaitan. And they're talking about the monograph in question. And they're saying that the result is this monograph, the result is a collaborative framework that insists on total insurance penetration, something that we've talked about, total insurance penetration in India, led by a vision that embraces inclusion, and we've talked about inclusion as well, and champions reform to encourage enterprise. So again, we have talked about the fact that you leave the enterprises in a situation that they are encouraged to innovate and to do well and to compete well. not just to serve the macroeconomic objectives, but to feed and strengthen them. So that means if the government has this objective that its crop insurance has to be given a fillip too, or if it has the objective that in the wake of disasters, more and more people should get the benefit of insurance coverage, the benefit of insurance schemes, then it is incumbent on the regulator and the market to ensure that we are putting ourselves in a situation which is able to create or serve these macroeconomic objectives. And also we're saying that we are trying to go beyond, in the sense that not just the macroeconomic objectives, but to ensure that this cycle is never broken. Now the forward goes further. It says the insurance regulator is reimagined as the ultimate underwriter of sort. Now what we normally do is that we're saying that the conscience keeper of an insurance company is the underwriter. And as you know, Dr. Chattoraj, underwriting is both the science and the art. It is both driven by data and also driven by experience. So we are saying that as far as the regulator is concerned, he has the enhanced role of an underwriter. So we are saying that he's an underwriter of sorts, underwriting human endeavors, who's required to challenge and change the status quo. So when we are saying human endeavors, we're talking not just commerce, we're talking lives, we're talking commerce, we're talking household endeavors, we're talking relationships, we're talking the entire gamut which is being indulged into by any human being. So that's why we are saying that underwriting all human endeavors. And then we are going further to say who's required to challenge and change the status quo. So we are imagining the regulator as somebody who is not only catering to the current structure, but he's helping to create a new structure which is going to be helpful to our society. And how does it do it? So saying applying behavioral economics propagated by Nobel laureate Richard Taylor of nudging with libertarian paternalism. So as parents, Dr. Chattoraj, what you've done and what I have done to my children. When the children were born, they didn't know how to feed themselves. So we let them get feeded, Right. We let them walk, So we ensured that we held their hands, We gave them education, but we did not, we just stopped there after having given the wisdom and the education, and we let our children stand on their feet. And once they started walking, we moved out of the scene, and they became good citizens. So that was a mandate of the parent. And exactly the similar sentiment has been expressed by Richard Taylor, who's saying that you have to nudge the society. You have to create examples. You have to create the framework. And that's exactly what we have said the insurance regulator in India ought to be doing.
Thank you so much. Coming back to your latest monograph, you mentioned that insurance governance for world's largest democracy should be fully insured and penetrated and inclusive. Do you think fully penetrated and fully inclusive is possible?
Absolutely, it is possible, because I think we have to understand two strands in our history and in our civilization. Unlike some of us who believe that India has been given to us by the Britishers. No, India and Bharat particularly has been in existence for more than 10,000, 15,000, 20,000, 24,000. And this is something that I'm not talking because I'm being sentimental. I'm saying on the basis of certain facts, certain dating, scientific dating that has been done. It established very clearly that we are we are the oldest civilization. We have been the richest civilization in the world. We have been the most inclusive society. And there was a time not so long ago, I think just about, 700 years ago, we were contributing something like 25% or more than that to the world's GDP. So we've been a rich civilization. Unfortunately, what happened, we've been subjugated for almost 400-500 years. So we've tended to kind of forget our roots. But I think if you really go back in terms of the entire civilization, the entire democratic process was already there. The entire inclusive process was already there. So all we are saying is that we can repeat it, we can redo it, and we can even do it better. It's just a question of now marrying the ancient wisdom to the modern tools. As you're aware, the modern insurance actually has come through mainly from the London practices, from what Lloyd's has been doing, which is more than 330 years old. So we are saying that we should now be able to marry those ancient wisdom that we have had to the modern concept of insurance. And absolutely is very much possible. The entire penetration saga that we talked about and the entire inclusive saga we're talking about.
You also mentioned that ease of doing business framework requires a mindset change among the policy makers. Can you throw some light?
I think it's a very important question you've raised, Dr. Chattoraj, and I'm so happy that you have picked on the mindset change, because everyone knows, how to tweak the systems, how to tweak the processes, But I think the entire tweaking of the systems and the processes starts in the mind, And it is the mind which tells you that, look, if there is a transaction between the two persons, let's say between Chattoraj and Arun, So my job, and if I'm sitting as insurer and Dr. Chattoraj is sitting as the consumer, or as my distributor, or as my the incumbent, which is the insurance company. So how do I enrich Dr. Chattoraj? I should ensure that I make him win. When I make you win, I win in the process, Dr. Chattoraj. So that's a mindset change we've talked about. How to make the others win first,
right.
You start winning.
Right. In this particular monograph, the latest monograph, you have mentioned that most of the conduct regulations go as prudential regulation. Can you throw some light on it and explain with an example?
I'm very happy, Dr. Chattoraj, you're asking this very, very relevant question. If you really see some of the latest development which are really going on in the developed insurance market, in fact, developed financial world, they have started recognizing the distinctiveness of these two types of regulations, the prudential regulations and the conduct regulations. In fact, few of the markets have actually gone further and said that, look, I'm going to have separate regulators, one dealing with prudential regulations, the other dealing with conduct regulation. And why is that important? Now, the prudential regulations, if you, as the name would suggest, it's all about prudence. It's all about trust. It's all about ensuring that you have principle-based mechanism in place, which will ensure that I have the right framework created. Now, in terms of the examples that you've asked me to talk about, let's say you're talking about the principle of capital, how much capital you should have to write how much of the risks that you will be undertaking. Now, when you're really talking about the risks, you're not just talking about the insurance risks. You're talking about the market risks. You're talking about the legal risks. You're talking about the credit risks. You're talking about the reputational risks, and so on and so forth.
Right.
What these markets have developed is a very scientific instrument called as the risk-based capital mechanism. This is entirely prudential in character. The entire solvency regime is prudential in character. And once having worked on the framework in terms of the prudential character of the risk-based capital required to run your business, then you are actually talking about a self mechanism by virtue of which you're leaving certain principles with the player themselves. And then according to the principles, those players are held responsible and those players are held accountable. So it is not the regulator who's telling you that, look, your solvency has come down, so you better ensure that your solvency is actually restored. It is the entire mechanism which is self-sustaining. So that's what is meant by prudential regulation. Now, as far as the conduct regulations are concerned, again, we've talked about the 4 Ps. We've talked about the product, we talked about pricing, we talked about the placement, and so on and so forth. Now, these are all conduct standards. So what you do is that you arrive at certain framework, and then you tell the player that, look, within this framework of conduct, which is basically minimum standard, you have to conform. If you don't conform, there'll be consequences and sometimes serious consequences. So again, you're really working on self-sustaining mechanism where the subjectivity is sucked out of the system. It's absolutely principle-based, it's absolutely objective, and that's how you run the market.
So that's where the maturity has not really come, if I get you right.
Dr. Chattoraj, we have said very clearly that, look, it's a question of, it's a chicken and egg story. I mean, we keep talking about the market is not mature. So we keep on intervening. Now, if after 20 years, if the market is not mature, then who takes the responsibility? So if we start saying that, look, market is there, 20 years have gone by, a lot of players have done extremely well. Some players have not done so well, but a lot of players have done extremely well. So therefore, the market is good enough to be indulged in from the perspective of bringing out the best global practices. And the moment you start realizing that you can work on this framework, you suddenly realize that magic will start happening.
The monograph also expresses concern that India has not been able to go for risk-based capital modeling. In fact, China started after us, and they have already implemented it. In India, we are still not been able to go for this. Why do you think it has happened?
I think it's just a question of focus. It's just a question of giving responsibility, accountability to the system. I remember the whole process was started in December 2011 in India. If you remember, there was this meltdown in Europe in 2008. The European market started working on Solvency II. They had risk-based capital, but then they did not have the economic risk-based capital, which they started working on via Solvency II. They picked up the tab in 2008. They finished the whole task by 1st of January 2016. China picked up the tab in 2012, 2013, and it finished on 1st January 2016. We picked up the tab in 2011, but we're still not there. The committees are being formed one after the other. But as I said, it's not just a question of committee. It's just a question of having accountability, giving responsibility to certain set of players, and having this belief that it is important, and therefore it must be brought into the system as quickly as possible.
The self-regulatory organization, you have discussed all 4 of them in your monograph, and you the monograph raised concern that self-regulatory organizations are really not self-regulated. They are not allowed to function the way they should. Why has it happened? You have at length you have discussed about them. Don't you think that the time has come that they should be allowed, as your monograph also mentioned, that they should be allowed to be self-regulated and take decisions and other things as per the requirement of the entity?
I think the moment you go back into the concept of self-regulatory organizations, you will understand that it is important. You know, it is very important because you're talking about in India, where you have 130 crore people. You know, where you have so many regions, so many states, so many cultures, so many languages, and so on and so forth. And if you really have to let the insurance penetration set in every nook and cranny, you will use every single instrument available under you that creates more and more penetration. Now, as far as the insurance councils are concerned, as far as the broker organizations are concerned, as far as statistical organizations are concerned, as far as the service institutes are concerned, now these are all, Dr. Chattoraj, highly technical bodies. These are not administrative bodies. Now, the regulator is not a technical entity. Regulator is an administrative body. So when you're really dealing with set of technical entities, you have to recognize that I must create sufficient conditions, conducive conditions for these technical organizations to become self-regulatory organizations, because the moment they start behaving as being responsible units, again, as I said, the magic will happen, because then you really don't have to let them come to you for every approval. They are then working on self-sustaining mechanism in terms of approvals, in terms of training, in terms of standards, in terms of conduct standards, etc., etc. And also at the end of the day, ensuring that if somebody is behaving a black sheep, you know, it is impossible for somebody sitting out there to discipline the black sheep. It is these organizations which can easily and more conveniently, discipline that black sheep. And that's why these self-regulatory organizations are so very necessary. It is not a question of the market has become mature now. The market has been there for a very long time. And I just thought that it should have been done long time ago.
So you feel that these entities must be given the kind of freedom and the leeway so that they grow well and serve the industry better?
It is not just freedom, Dr. Chattoraj, because it's not license, it's not freedom. We're just saying these are already the professional entities.
Right.
Recognize them as professional entities.
Right.
And give them due respect, due regard,
absolutely,
recognition. So it's not just I'm granting freedom. I'm giving you independence. I'm saying you're already there. You're doing a wonderful job, and I just go ahead and recognize that do a much better job. That's about all.
So the most important chapter that I liked most was the principle-based regulatory framework. And one thing, what is mentioned here, that license Raj has been replaced by compliance Raj in India. The regulatory adherence to the prescribed checklist rather than outcomes. That's something really shaken up everything. Can you throw some light to explain why it is compliance? How can we really move from compliance to outcome-based progressions?
I think if you really, this actually came to me. I mean, in any case, we have talked about it in monograph 1, monograph 2, and not just in monograph 3.
Right.
But somewhere, I think in 2018 or somewhere in Mumbai, I was attending a conference on financial regulations. And this actually came from one of the players to say that, look, the license Raj actually has been replaced by compliance Raj. And I don't know whether you've seen a talk from a gentleman called Manish Sabarwal. Manish is chairman of Team Lease. It's a very large company. And Manish has said very clearly that look, if you really see the entire world of the business, and if you really see the businesses who are there in the employment business, employer-related businesses, there are 57,000 compliances, 57,000 compliances. And he's proven through data, and on his website, he's put the numbers. And he says these compliances are changed 8 times every single day. And there are 8,000 compliances out of 57,000 compliances which have criminal implications. So you can imagine, and this is not just there in manufacturing, in services, in banking, insurance. And that's why you've seen Prime Minister talking about ease of doing business, ease of doing business, ease of doing business. Because every single conscientious commentator in India is now saying that we still don't have the ease of doing business framework. So if you have a system where, as a mature entity, you're given certain principles, you're given certain guidelines, and then ask those entities to simply conform to those guidelines. If they don't do it, they know the consequences. Rather than giving them thousands and thousands and thousands of forms and in all these applications, and so you're making them tick every single box. So what happens is that you may have a very compliant entity, but you may not still get the right outcome. And that is another thing we have observed in our monographs consistently, saying that we should move away from a regime of input management to outcome-oriented management.
And that's good. That's the reason precisely that you talked about single window system.
Yes, absolutely. And single window, I think, is another good question you have asked, Dr. Chattoraj. As you know, in the insurance world, we're not dealing with one single entity. We're dealing with regulator.
Right.
We're dealing with the finance ministry. We're dealing with home ministry on certain issues. We're dealing with the Ministry of Transport, and we're dealing with state organizations and so on and so forth. So we have worked on this concept to say that, look, there should be a single window treatment. And in our concept, it is the regulatory office which should subsume the entire gamut, the entire world, and it should start, if I have problem with the taxation, and if I have to run to the GST Council, or if I have to run to the direct taxation department, I'll be lost, and that's exactly what players are doing, Rather than if I have a regulator with whom I know, he knows me, and if he understands my problem much better, if I just go to him and say, sir, this is my problem on the taxation, not
right.
just my problem, if you do it, you'll help the market, you'll help the market increase its penetration. So then, therefore, the likelihood is that regulator will be much better placed and a much better position to be able to then, take up the cudgel with the respective owner and to say that this is my industry, this is what it wants, I'm the custodian of this industry, I understand their pains, and if you do it, it will help the entire insurance industry. And that's how the entire concept of single window arose.
Very well said. We will end this conversation by mentioning that you mentioned that business leaders in India have been demanding principle-based architecture, and you mentioned banker Uday Kotak and Mr. G.N. Bajpai. Mr. G.N. Bajpai is also one of the members of Board of Governors BIMTech. And I quote Mr. G.N. Bajpai, what you mentioned in your monograph. The product basket, distribution channels, selling techniques, and go-to-market and regulatory design framework must undergo a comprehensive re-engineering. Is that what exactly is needed? A comprehensive re-engineering?
Absolutely, and that's exactly what we have talked about in the last 45 minutes, Dr. Chattoraj. You have to work on the ease of doing business framework. You have to ensure that you have the self-regulatory bodies in place. You have to ensure that you have the distinction between the prudential regulations and the contract regulation. You have to ensure that you become from just being a regulator to being a facilitator. You ensure that your main job is, apart from disciplining people, is to ensure that the insurance actually is deepened. When you deepen the insurance, you deepen the inclusion. So when you do that, that exactly is a comprehensive re-engineering me and Dr. Bajpayee is talking about.
Thank you, Mr. Agarwal, for the wonderful conversation, and wish you all the best for this monograph and the kind of work you are doing already in recent future. Thank you so much for this wonderful conversation.
Thank you so much, Dr. Chattoraj. Thank you to you, and thank you to entire BIMTech for having become our knowledge partner, for having supported us.
It's our pleasure, sir. It's our pleasure. Thank you so much.